Hi, I'm Scott Bauer, CEO of Prosper Trading Academy, and today we're going to focus on how to make your own watch list. As a trader, you must be prepared every single day before that opening bell rings. You've got to be prepared just like you would do for any other job that you're performing or studying for a quiz, studying for an exam, because no trading day is going to be the same 2 days in a row, 3 days in a row, a week in a row. The market changes on a daily basis. And a question that I receive from option traders almost daily is, what's on my watch list? You need to have your own watch list. The standard professional day trader or hedge fund only accesses and utilizes a small fraction of all those stocks available. With over 6,000 companies listed on the New York Stock Exchange and the NASDAQ, the notion of selecting stocks for option volatility trading strategies, or even traditional stock picking for that matter, can seem completely overwhelming, if not downright impossible. In my years as a trader at Goldman Sachs, and from my experience as a market maker on the floor of the CBOE, Chicago Board Options Exchange, I've developed a specific set of criteria to analyze potential stocks that can be used to trade my option volatility strategies. Every trader's watch list breadth is going to depend on how much time they're able to commit to developing and maintaining the list. In your initial setup of your watch list, avoid being too specific with your requirements. I know many traders who have hundreds of stocks on their watch list, and this can be extremely overwhelming, especially if you're a new trader. With all of the potential setups, traders can get a sort of analysis paralysis that leaves them frozen and unable to execute on any of the trade opportunities sitting right in front of them. For example, I typically only have, around 40 stocks or so on my daily watch list. The reason for this is the strategies that I use and trade with simply are not supported on a majority of stocks. So, how does someone narrow down, select, and organize the proper stocks to trade and invest in? A proper stock trading watch list should contain candidates that the trader wants to examine on a daily, weekly, and maybe even a monthly time frame. It's recommended that the trader have an understanding of how the various stocks on the watch list will react to individual catalysts like geopolitical news, earning reports, etc., and how these reactions may affect other stocks on the watch list. If a majority of your watch list is comprised of, let's say, tech sector stocks, then you may need to be aware of any catalysts that may affect the sector as a whole. It's time consuming and complicated to dial in a watch list that's a perfect fit for you as a trader. So how do I find stocks in which the options will have potential setups to trade volatility strategies? First, I look for hot stocks in the news, market movers if you will. Stocks that post earnings in a couple of weeks. Stocks that just released earnings 1 or 2 trading days ago. And stocks that have recently made a 6-month high or low. Stocks where the option volatility is nearing a 6-month high or low. And I always look at stocks whose option open interest on at-the-money options are greater than 250 contracts. I look for active weekly options, recent stock and option volume leaders. So let's look at some of these categories in greater detail. Hot stocks or market movers. While I'm a frequent contributor to the financial news networks, you don't have to be a TV commentator to stay on top of the current buzz. There are a host of reasons a stock will suddenly become a hot topic. Whether it's from positive news of a potential buyout, a large contract award, maybe it's the Wall Street Bets Reddit news, or negative news like a corporate scandal or a management shakeup, the stock often becomes more volatile. This distribution of market volatility doesn't always occur symmetrically for all of the stock option contracts. The news events can have different implications for different options, therefore creating setups to trade my volatility strategies. So stocks that post earnings in 1 to 2 weeks and stocks that have just released earnings a couple days ago. Traditional stock traders find earnings season to be a disruptor to the normal ebb and flow of stock prices, an annoying event which often causes otherwise unpredictable multi-standard deviation moves. But for my trading strategies, I find earnings season to be full of opportunity. Earnings announcements often cause a rise in implied volatility in anticipation of the event. And I've found that the optimal time to look for aberrations or mispricing in the volatility curve is 3 to 5 days before the announcement. As the earnings announcement date approaches, the volatility strategies become less of a factor, and the options tend to be more of a directional play. However, right after earnings have been released, implied volatility typically falls tremendously, and aberrations may occur in the option prices as renewed uncertainty can return to the market. Stocks that recently have made a 6-month high or low. I'm not a market technician, and I've never really charted stocks. Besides using my expertise trading volatility trends, I've never really traded based on market technical indicators. But any stock options trade needs to be considered in context. Stocks that have made a 6-month high and low will often behave differently than stocks that are in the middle of a range. 6-month highs and lows can often be viewed as key areas where supply and demand meets at critical levels, or in other words, support and resistance. Support occurs at a price level where buyers overtake sellers. Usually as a stock declines, it gets cheaper and cheaper. Support acts as a floor by preventing the price of a stock from trading lower. Identifying support levels along with option volatility trends helps me construct profitable trading strategies. Resistance occurs at a price level where selling is strong enough to prevent a stock from rising further. Stocks whose open interest on at-the-money options are greater than 250 contracts. I always look for that because I'm looking for stock options that have enough liquidity that if I want to eventually make a trade, there's enough liquidity to execute the strategy. Illiquidity in the options market becomes an even more serious issue when you're dealing with illiquid stocks. After all, if the stock is inactive, the options will probably be even more inactive and the bid-ask spread will be even wider. Imagine you're about to trade in a liquid option that has a bid price of $2 and an ask price of $2.50. That 50-cent difference might not seem like a lot of money to you. In fact, you might not even bend over to pick up 2 quarters if you saw them on the street. But for a $2 option position, 50 cents is a full 25% of the price. Imagine sacrificing 25% of any other investment right off the bat. Not too appealing, is it? Recent stock and option volume leaders. Volume is the number of shares traded during a given time period and indicates an interest level in a stock. Typically, if a stock is trading on low volume, then there's not much interest in it. Conversely, if a stock trades on high volume, then there's a great deal of interest. Volume also leads to liquidity. The more interest in a particular stock, the more the buyers and sellers are there in the marketplace, thus more liquidity in the stock and stock options. Higher volume often can signal the end of a directional move. When I see higher volume coupled with a support resistance area, this becomes a great indicator providing me a signal to then conduct analysis on implied volatility. Thanks so much for watching. If you enjoyed this content, please like, comment, or subscribe. For access to my watch list, click the button below.